Hi there, hope you're well. It's obviously winter, it's been a bit cool, so I hope you're staying warm. I wanted to start by saying a big thank you to you all. It was great to get to chat to you over the last couple of weeks and share the news that we'll be working under the Braeside Wealth Licence from the 1st of July. Really important to us because it's the final piece in the puzzle to allow us to declare ourselves 100% independent, which is always the way that we've run the business and operated, and we couldn't have done it without your support. So thank you. We can't wait to kick off on 1 July under the Braeside Wealth Licence. Last time we caught up in the newsletter, we had a bit of a chat about some of the storm clouds that we were seeing around investment markets. And unfortunately, those storm clouds have probably developed a bit further. And we've had a couple of clients sort of talking to us over the last week or two about whether they should be changing things. And I think we all know that investing in share markets over long periods of time can provide attractive returns. But from time to time, markets do underperform. And when that happens, there can be a feeling like I need to do something, I need to change. And so I thought we'd have a bit of a chat about that today. Now, there's been some talk in the media about the US share market being in a bear market. So what is a bear market? Well, a bear market occurs when a market has been going up and then it's dropped. And when that market has dropped by more than 20% from the previous high that it's had, that's what they call a bear market. And the US share market, it meets that definition at this point in time. So this chart here actually goes into some more detail, and it shows global stock prices all the way from 1980 through to the end of 2021. And what you can see here is in gold, different bear markets that we've had over that time. And we've actually had 9 bear markets over that 41-year period. You can see some of them have been quite long, some of them quite short. But interestingly, if you had have invested back here in 1980 and just rode that market, took the ups and the downs, then you would have received a return, even with those 9 bear markets where the value had dropped by more than 20%, a return of over 3,000% over that 41 years. So that's the reward that we get from investing in share markets. And I guess that the trade-off is that from time to time we are going to get these bear markets. But the ups are more frequent and they outweigh the downs. So let's have a look at this next chart, which goes into some more detail about that. So again, back to 1980, the gold is bear markets and the green is bull markets. Now, interesting fact, bull markets are occurring when share markets are going up. They're charging like a bull, so that's why they call them a bull market. And bear markets is what we call when bears sleep, they hibernate, and that's what we call a share market, which is falling and has fallen by more than 20%, as we spoke about before. So these bear markets, average return during that period, negative 28%. So not much fun. The length of those on average, 236 days, roughly 2/3 of a year. When you're in the middle of one, it can feel like they're never going to end, but we know that they do. Bull markets, on the flip side, have provided an average return of 99%. So far outweighing the bear markets, and the average length of a bull market, 852 days, so more than 2 years. So again, you can see that on average they last much longer than bear markets. So this is just highlighting again that reward that you get for investing in markets over long periods of time. And if you're trying to, if we go back up here, if you're trying to time the markets and trying to buy and sell and all of that type of thing, it's really hard to get that right. We'll talk about that some more in a moment. So what can you do when volatility hits? First thing I'd suggest is try and tune out the noise. Now that's easier said than done these days. You can be checking your account every day if you like, your newspapers and the news and everyone telling you the share market's crashing, or the newspapers. I love running a story. Share market loses $50 billion in a day. It doesn't print the same story in 3 days' time when it makes $60 billion in a day. Generally, bad news sells more papers. So if you can tune it out, try and do that. Maybe instead of watching the financial news in the evening, go for a walk or something like that. I know it's easier said than done, but things will improve. It just takes time. Number two, remember your plan. Now, when we're putting a plan in place for clients, we don't know when these markets are going to happen. We don't know when these falls are going to happen, but we know that they are going to happen, and we build them into the plan. So we don't assume that share markets are always going to go up. We know that there's going to be ups and downs along the way, and we build that into your plan. Diversification is your friend. So all of our portfolios are diversified. What that means is we don't just put all of the money into one stock. We're invested across thousands of different companies in different asset classes in different countries. And what that does is that'll help to smooth returns for you. So mightn't always feel that way, but diversification certainly helps to smooth the ride. As we spoke about before, don't try and time the market. Every time you buy or sell, you're incurring transaction costs. There can be taxes, and more often than not, you're not going to get it right. So we can't get it right. There's people that try and do it for a living that can't get it right. So generally speaking, if you're investing over the right time frame, you've diversified your portfolio, you've got an appropriate plan in place, generally the best thing you can do is to be holding on and pushing through the other side so that you participate in that next bull market. And number five, call us. If you're not sure, if you're feeling stressed, if you're worried about anything, then give us a call and we can have a talk about things. We might not be able to solve the issue, but we'll certainly do our best. And sometimes just having a bit of a chat can make you feel a bit calmer and under control. So we've seen lots of bear markets over the years. As we saw before, we know that the next bull market is just around the corner. And until then, take care, and we'll talk to you soon. Cheers.